The legacy world has spent centuries regulating and optimizing and figuring out how to answer the question who, how to adjudicate the question of who, the dispute resolution systems and the property rights systems and the transnational agreements. The cryptocurrency space doesn't. So how do I bring real-world assets? How do I build real-world businesses in a space that lacks a who? I have to invent one, a digital who. Horton heard the who. I need to have identity on the chain. So you have to have identity with privacy, because the minute you have who, you have to decide who gets to know.
Bitcoin's recent market volatility, influenced by global macroeconomic factors like the escalating Iran-Israel conflict, has raised concerns about its short-term stability. Despite a notable outflow of over $300 million from US-based spot Bitcoin exchange-traded funds in early October, there are increasing expectations for a price rebound, as confidence in the cryptocurrency's long-term potential remains strong. This situation underscores the urgent need for more secure and scalable blockchain platforms to meet rising demand. Charles Hoskinson, the founder of Cardano, is actively addressing these challenges. He believes that third-generation blockchain platforms must evolve beyond scalability issues to tackle governance, privacy, and identity verification concerns, paving the way for broader adoption. As Bitcoin's price rises, the need for enhanced blockchain infrastructure becomes even more critical. Hoskinson envisions a digital world that leverages fourth-generation solutions, such as private smart contracts and digital identification, which could unlock billions in real-world assets and enhance trust within the blockchain ecosystem. Today's reliance on trusted intermediaries undermines decentralization and must be replaced with secure identity verification systems that are integrated directly into blockchain networks. This transformation is essential for fostering trust and facilitating the growth of blockchain technology in a rapidly changing market. Before we continue with the rest of the video, do check out Daily 5-Minute Crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns. And the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
What Cardano is dealing with right now, how do you build a government? Because you're not dealing with a simple utility, digital gold, teleporting Bitcoin around. You're talking about a programmable system. So you have to upgrade that system. You have to evolve that system. You have to make that system better. Okay. So the third generation comes in, and there's tons of booths all around. You see them. And they talk about scalability and interoperability and governance. You have your SWEs. Congratulations on Circle. Missing anyone? You have your Aptos. You have all of these people, Algorand, Solana, and yes, Cardano. And we're all fighting, and we're in the middle part of the third generation. And it's exciting and it's fun, because every time you have a generation, you get a whole new scale of capabilities. When you have scalability, it means it's cheap to use the systems for millions of people. When you have interoperability, it means your systems talk to each other. You can truly build an internet of money. You can build an internet of finance. It's awesome. And when you have governance, it means you harness the wisdom and the capabilities of millions of people throughout the world, the wisdom of the crowds. Suddenly, the people building on your system are your product managers. The engineers building dApps and DeFi are the ones talking about how to improve the protocol and grow the protocol. The collective wisdom of this is worth billions of dollars of labor. And we get to harness all of that. We couldn't with the second generation. And we couldn't even possibly tackle the problems we're tackling in this industry, from DeFi to intellectual property and other things with Bitcoin. That's why everybody's trying to upgrade it. You'll hear lots of terms like real-world assets, okay, security tokens, DAOs, business on the blockchain, all these things. Why don't we have them? It's like the flying car. It's like fusion. It's always 5 years away. Don't worry. Trillions of dollars are waiting. They'll come into our industry. Why can't we get there? Because here's the problem. Blockchains are super awesome at public stuff. They're auditable, timestamped, transparent, immutable. Good, great. You put it there like a domain name service. You put something there like a financial transaction. Everybody in the world can see it, believe it. It has integrity. Awesome. But what about the private stuff? What do we do with that? Do you like running a business where all your HR is public? You like running a business where all the money in the cash registers is public? How many people want all their Google searches to be public? Show of hands. Nobody? What about Amazon purchases? What about your political preferences? What about who you voted for in the election? Turns out that privacy is kind of part of the deal. And every real-world application, asset, business, transnational agreement always has two sides, a public side and a private side. The public side, we do well, and we're starting to master the art of programming it and scaling it and getting it done. But the private side is still something that's not clear, and in practice, how we're solving it is the same way we've always solved it. You pick somebody you trust, you give them the information, and you hope to God they don't lie, steal, cheat, manipulate. So if you have a blockchain application with a private and a public side, and the private side is off-chain and centralized, do you have a decentralized application? No. That's the first challenge. The second challenge is in the legacy financial world, and frankly, the real world, you don't have this idea of transactions without identity. You don't have this idea of businesses and no identity, assets and no identity. When you see a plot of land, what's the first question you ask? Who owns that? When you see a business, who owns that? Who? Something happened. Who were the people involved? What's the story behind that? So where is this in crypto? We have accounts. We have UTXO, we have transactions, and we have metadata, but where's the identity primitive of these types of things?
Charles Hoskinson highlighted the challenges of integrating real-world assets and enterprises into the cryptocurrency sector. He underscored the significance of a digital identity, a blockchain-based system that prioritizes privacy and selective disclosure. This concept is vital for bridging the gap between traditional finance and blockchain technology, allowing individuals and businesses to retain control over their data while engaging in decentralized systems. The current fragmented state of the blockchain industry fosters competition and creates misaligned incentive. Hoskinson argued that the next generation of blockchain should promote interoperability, reward collaboration, and ultimately benefit customers. This shift has the potential to unlock trillions of dollars in real-world assets, enabling secure medical records, sustainable supply chains, and on-chain financial markets. By making this technology accessible, the industry could unify, much like Satoshi Nakamoto's vision for Bitcoin. Let's take a look at more excerpts from Charles Hoskinson's speech.
The legacy world has spent centuries regulating and optimizing and figuring out how to answer the question who. How to adjudicate the question of who, the dispute resolution systems and the property rights systems and the transnational agreements. The cryptocurrency space doesn't. So how do I bring real-world assets? How do I build real-world businesses in a space that lacks a who? I have to invent one, a digital who. Horton heard the who. I need to have identity on the chain. So you have to have identity with privacy, because the minute you have who, you have to decide who gets to know, who gets to see, who gets to decide. You have to have this concept of selective disclosure. So the fourth generation, the generation that's going to merge the legacy and the Web3 world and bring billions of consumers in, really the two big pillars of this is, in addition to being scalable and interoperable and having good governance and programmability and decentralization, must have privacy, private smart contracts, and must have some concept of identity. The challenge is, unlike scalability, unlike interoperability, unlike decentralization, where there seems to be an obvious path of where to go and how to do that, more is better, cheaper transactions, faster transactions, and trade-offs. The same for privacy. When you look at privacy, what are we actually talking about? Like, to whom? What guarantees do you get? What's the portability of that? How do you disclose that? How much overhead is required? Is it private forever to the end of time? Is it private for a little while? Is it private within a certain security model? So this is the next generation as we talk about these things. But then there's also a meta problem in the blockchain space. We've gone from too few to too many. There's more than 40,000 blockchains. There's millions of assets all around. And we all have perverse incentives to hate each other, not pay attention to each other, dislike each other. Why? Because we have tokens. You have token A and token B and token C and token D, and you put your names in, and you go and talk to these people, and if the person owns the token, it is virtuous and good. And if it's competing against another token, that token is evil and bad. Bag holding. That's the world we live in. And guess what? You can never build an economy where people's financial incentives are at risk. People, no matter what their politics and beliefs are, will always default to their incentives. It's a reality of human nature. So then how can we build a space that has interoperability and everybody's working together and collaborating and it's good for the consumer if the system, by its very design, promotes, incentivizes, and rewards fragmentation? That's the fourth generation. It's the generation that brings us together. It's the generation that gives us identity. It's the generation that gives us our privacy and for the first time ever allows blockchains to keep a secret. And it's the generation that opens up the floodgates and allows us to finally have the trillions of dollars of real-world assets that are waiting on the sidelines that require these things to come into the cryptocurrency space. That is the last generation we need. Because at that point, everything is just iteration. This is what's going to bring ESG in with supply chains and measure the carbon of every business in the world. This is what's going to bring the financial markets in because you don't have to reveal your trading strategies to trade on chain. This is what's going to allow you to have DAOs that live 100% on chain because the DAOs, for the first time ever, can keep a secret. And thus, a real business can be on chain. And you know what? By giving it away to everybody, like Satoshi did with Bitcoin, just mine it if you want it, it means the whole industry, for the first time ever, has one thing that they can care about together and agree about.
According to Charles Hoskinson, third-generation blockchain platforms aim to tackle significant challenges by extending beyond Bitcoin's limitations as digital gold to create programmable systems. Recently, the market has seen an outflow of over $300 million from US-based Bitcoin ETFs, following a notable inflow of $11 billion into these funds in September. The previous 3 weeks had shown consistent inflows totaling $1.91 billion since September 13. However, increasing market disagreements have driven Bitcoin's price down to a weekly low of $64,450. On October 4th, better-than-expected U.S. payroll figures helped restore some market confidence, allowing Bitcoin to regain the $62,000 milestone. Consequently, ETF products experienced inflows of $25.59 million that day. Despite this recovery, the 3-day outflow streak was not fully reversed. Cryptocurrency expert Ollie noted that Bitcoin miners have sold approximately $143 million since September. He cautioned that selling pressure could escalate if Bitcoin falls below the short-term holder realized price of $63,000, which reflects the average purchase price for short-term investors. Analyst Immortal believes the short-term target should be slightly higher at $64,000. If Bitcoin can break through this significant resistance level, it may signal the beginning of a strong bullish trend. Meanwhile, experts maintain an optimistic outlook on Bitcoin's long-term potential, citing past Q4 performance and anticipating U.S. rate decreases. Despite short-term volatility, prices are expected to reach $72,000 or more soon. What do you consider the most significant challenge to the widespread adoption of blockchain technology, and how can it be addressed? Please share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.